Okay, everybody, here we go. It's lovely. It's beautiful. So get ready for it. This is my pre-market report on this Thursday, September 8th, 2022. People, look, this freak show literally continues to get even more freaky. What am I talking about? So there's a couple of pieces of news that we need to talk about. Let's start off with this. It's just beautiful. Just absolutely beautiful. So the European Central Bank has now hiked the overnight lending rate 75 basis points. Okay. There was all this anticipation. What are they going to do? Oh, maybe 50 and 75. They really want to fight inflation. Look, inflation in Europe is out of control. Just like here. Worse over there, actually, right now. The European Central Bank has been raising rates now for quite a while. But this time, they promise it's going to make a difference. It's going to stop. We're finally going to see inflation start to slow down. How about there's no chance in hell or any place else that that's going to happen? The people are being duped, lied to, distracted, and propagandized again on a global level. There is no way, you know this already, that either here in the United States or in Europe or anywhere around the world for that matter, that by central banks, nudging, let's nudge the overnight lending rate. It's really going to combat inflation. This time it's going to work. It's going to work. No, they have no intention at all whatsoever, and I mean zero, to slow inflation. Central banks want to continue to inflate. This is an attack on you. If you're a member of the middle class, you are being eliminated, exterminated. You're going extinct. So just be ready for that. Anyway, so we also found out, I don't pay this any mind at all, and I don't think you do. So we got this first-time unemployment claims number this morning, and it came in better than expected. And, the commentators are all gleeful. Oh, our economy, it's so strong. It's great. Yeah, all right, make this shit up here. It's impossible to do. So yesterday, look, we had a pretty big rally here on Wall Street. We watched the 10-year yield come down. We watched the dollar reverse and go lower. That phenomenon this morning, although stock futures are slightly in the red as I am doing this video blog, trading doesn't start for about 35 minutes. You got the 10-year yield slightly lower than the close yesterday and the dollar slightly weaker. All right. Now, the market is kind of in a holding pattern. Look, it's ignoring what happened today, in my view, with regard to the ECB, because it's dog shit. It don't matter. And it's just a joke. And the joke is on the people of the world here. Central banks got a boot on the throat of everybody. They are the government. They control the economy. They control the financial system. Everything else is just theater. Okay? Just wake up. So today, actually, as I am doing this, I believe the thing known as Christine Lagarde is talking. And I'm sure she's going to say, oh, we're really going to make a difference this time because we've been raising rates for months and it keeps going higher. But this time it's going to be different. You know why? I don't know why, but it is going to make a difference this time. Duh. How about no? But we're going to hear from the supreme it later. And I'm talking about Federal Reserve Chairman, freaking freak show himself, Powell. All right. He's going to do a little talking later. Whatever comes out of its mouth, is just ignore it. Follow the 10-year yield. Let's see what that does. Follow the MMRI. Let's see what these two things do here. And, look, it's all just going to be nonsense. More distractions, more deceptions, more propaganda out of the mouth of public enemy number one. Number one, that's the Federal Reserve. And the ECB, let me tell you something, runs a close second here. These two central banks do everything in tandem. One of these central banks does one thing. Usually it's the ECB. The Federal Reserve follows generally what the ECB does. So just Start paying attention to that too. And the narrative between these two entities is going to be very, very similar. So just be ready for that too. Now, I was writing a few things down this morning again. We got a couple of stark warnings yet again from two major banks. Let's start off with Goldman Sachs. So Goldman Sachs, and this is their words, not Greg Mannarino, is warning of a severe drop in home prices. A severe drop in home prices as high as 40%. 40. I would call that, if that would happen, if housing prices were to fall 40%, like the house you're in right now, if you happen to own it, that alone could spark a worse depression than we already are in. I mean, we're way beyond a recession right now. And you got Deutsche Bank here warning that the stock market could potentially fall much further from where we are. Now, look, this market has recovered really almost miraculously off the recent lows here. We're nowhere near in bear market territory anymore. Look, the situation is very simple, and you know this better than anybody else. I don't care what the Federal Reserve says they do or don't do. They're buying the market. The Fed is buying the market. They have a trading desk at the New York Fed. Look it up. They don't play in front of it. They don't frolic around in front of it. No, they actually use it, all right? And so, again, we have a managed market, just like some piss-poor third world nation, communist nation. That's all this is. It's a managed market. And, the illusion of the markets is, okay, markets are doing good. That means our economy is doing well. People get duped into that. There's no connection whatsoever. None. Zero. Between the managed stock market and the economy, which is in collapse. We have a collapsing economy, and it's collapsing faster. I mean, yesterday was epic. We got stunning admissions from the Federal Reserve that inflation has not yet peaked. It's continuing to get higher, go higher, despite the fact that they're raising rates too, just like the ECB. Duh. Okay, ain't working, not going to work. You knew that since day one because we spoke about it right here in this video blog. Okay, lovely. And, how everything is just, their forward guidance out 6 to 12 months is things are going to get worse. Can I get another duh, please? Or is it too early for a duh? I don't think so. No, it's not too early for a duh. Double duh. Things are going to get much worse. And let me explain this to you in case you know. The Federal Reserve, their Beige Book yesterday, their crystal ball that they look into, they know where this is going because they're driving it. They're driving the economy. They're driving the financial system. Period. Anyway, so look, in my view, and I've been telling you this for weeks, we have a liquidity problem. Liquidity is drying up. The debt market here is sending us a pretty big sign here. All the sell-off in global debt is causing bond yields to rise. All right. Central banks, let's see what they do because they run the show here. We've discussed, you and I, many of you have commented about this, what you think central banks are going to do. If they don't get a handle on this, if we continue to see rates spiking around the world, 10-year yield more specifically, it's just, then what Deutsche Bank is saying right now is going to happen, that the stock market could potentially fall much more. Absolutely. And I mean much more. Look, these institutions, they're not stupid. You're not stupid either. You do realize that this whole thing here, the key is what? The debt market. The debt market is illiquid. It's insolvent, and it can rapidly get out of control. If we do see that meltdown, which we know is going to come, and we can see this by watching how fast that 10-year yield is rising, putting pressure on the stock market, I mean, that's it. The stock market could melt down to the point of 80% off of its recent high. 80% off its all-time high. I mean, it could be worse than that. I mean, we just don't know here. If Goldman Sachs is correct here with a severe dip in home prices, almost 40%, I think they said 39% actually, that could potentially be a black swan event here. Because remember what happened last time. when housing prices fell through the freaking floor. The world fell into what is now known as the financial crisis of all time. And yeah, I think that potential is still there. Absolutely. All right, so look, a lot of stuff going on here this morning here. And I want to hear from you. Do you believe, here's the first question. Do you believe that now this time, with regard to the European Central Bank, they're really going to do something about inflation, because they're serious about it this time, because they raised the overnight rate 75 basis points, their biggest in history, and now it's going to make a difference? How about it won't do a damn thing? And the Federal Reserve is going to follow up with the same damn thing coming up pretty soon here. What do you think about these warnings? Goldman Sachs, do you believe Goldman Sachs is correct that a severe drop in home prices is going to occur, as much as 39%? What about Deutsche Bank? Do you believe them warning that a stock market sell-off is possible? Large one? I mean, I don't know. And then we got Powell later. It's going to open its mouth. He's going to move the market, no doubt about it. All right, people, look, that's it for this lovely pre-market report. I didn't freak out too much today. A couple of I didn't draw any pictures of poop today. Like, a lot of you got off on that. Why did I draw a picture of poop yesterday? I don't know. Between friends, we can do anything we want. All right, look, love you a lot. Please comment, share the video. Promise to see you later.